Now let's do an application on the balance sheet. The reason I did not record a PowerPoint for the balance sheet is just because the theory side of it it's not very hard. It's actually a review from your accounting class, so I figured you should be fine just reading through the PowerPoint. So let's work on this application here. We are going to classify the following balance sheet items as current or non-current. Current means short-term assets or liabilities. Non-current means long-term assets or long-term liabilities. This distinction is also going to help us when we discuss the cash flow next. So let's see what we have. Return earnings. If you remember when we discussed the income statement and return earnings, we said that this statement, return earnings, is a cumulative one. Anything that's cumulative is going to be non-current or long-term. It's not going to end in a specific period of time, less than 1 year. Accounts payable. This is a current liability, which is current. Prepaid expenses. This is another current asset, is when the business pays ahead of time some expenses like rent, insurance, prepaid expenses, current assets, current. Plant and equipment. This is something that the business owns for the long term. We buy plant and equipment for the long term, and this is non-current. Inventory, current assets, current. Common stock. Common stock is part of owner's equity on the balance sheet. Anything that's in the owner's equity side is going to be non-current. Common stock, then we can have preferred stock. So those are all going to be non-current. Why? Because once the company issues stocks, they are going to, even if they are purchased and sold and purchased again, somebody still holds them. So it's a long-term type of asset. Bonds payable. This is a liability the business has to pay off its bondholder at a future time, usually long term, so it's non-current. Accrued wages payable. What's that? It means that the business hasn't paid its wages. It's a current liability at this point of time. Accounts receivable. This is classified as a current asset, so it's current. Capital paid in excess of par. This is the amount paid by investors in excess of the par value. What is the par value? Is the initial value for the stock. For example, let's say that the business issues stocks at, let's say, $2 per share. And later on, those shares will sell in the market for $5 per share if there is high demand for those stocks. So the capital paid in excess of par is 5 minus 2, $3. Preferred stock. This is again part of the stock holder equity, so it's non-current. Capital, I forgot to say, since this is part related to stockholders' equity. Non-current, and marketable security is a current asset, so it's a current type of item. So that was the exercise, and then you are going to work on your own on the next one, balance sheet and income statement classification, to make sure you really understand the type of the assets involved in these statements. These two statements we cover so far, income statement and balance sheet.